Imagine waking up tomorrow and discovering gold has quietly surged higher overnight, even though everyone's still talking about delayed rate cuts. It's one of those moments where the headlines tell one story, but the market is whispering something completely different, and missing it could cost you. Welcome back to Currency Theory, where we dive deep into the hidden currents driving precious metals and the moves smart money makes before the rest of the world catches on. Before we go any further, make sure to hit that like button and subscribe, because we bring you updates like this almost every week, and you don't want to miss what's coming next. Now, let's get into why gold is defying expectations right now. For months, investors have been bracing for interest rate cuts, thinking that lower rates would push gold higher. But the Fed has delayed those cuts, and yet gold hasn't just stayed afloat. It's been quietly climbing. At first glance, it seems contradictory. Conventional wisdom says delayed rate cuts usually cool gold prices. But here's where the bond market tells a very different story. The key is in real yields. While nominal interest rates may be high, inflation-adjusted yields have been dropping, which reduces the opportunity cost of holding gold. Smart money knows this, and they're positioning ahead of the mainstream crowd. Bonds are signaling that despite rate delays, financial conditions are actually loosening, giving gold a subtle tailwind. It's a nuance that doesn't make it into the headlines, but at Currency Theory, we make sure you see it. Another factor is the persistent uncertainty in global markets. While investors debate rate decisions in the US, geopolitical tensions, currency volatility, and debt concerns overseas continue to create safe haven demand. Gold, as always, benefits quietly when the rest of the world hesitates. And this isn't just a short-term spike. The trend we're seeing is controlled, methodical accumulation by institutions that understand macro shifts far better than retail investors following daily headlines. We can also look at positioning data from ETFs and futures. Contrary to popular belief, retail interest in gold is still lagging, while institutional flows have been steadily increasing. This imbalance often precedes bigger moves because when the masses finally step in, gold is already in motion, and those who waited too long often enter at a disadvantage. This pattern has repeated itself multiple times over the last decade, and the signals we see today are eerily similar. Currency Theory has been tracking these subtle shifts closely. Even though it feels like nothing is happening because rate cuts aren't happening yet, gold is silently digesting every bit of macro news, bond data, and safe haven flows. The market is telling us that the real story isn't about what central banks announce today. It's about how smart money is positioning for tomorrow. And that's where the opportunity lies. So, what does this mean for you as an investor or someone watching from the sidelines? It means staying aware, understanding the signals, not relying solely on headlines. Diversifying into physical gold or trusted financial instruments can protect against volatility. But the bigger lesson is reading the market's whispers before they become shouts. At Currency Theory, we emphasize timing, positioning, and patience, because gold rarely rewards impulsive decisions. As we wrap up, think about what this means beyond just gold. The bond market, inflation data, and geopolitical shifts are interconnected. Watching gold now gives you a lens into broader financial trends. And if you found this breakdown helpful, comment below with your thoughts or predictions on gold's next move. Share this video with friends or family who follow the market, because these subtle trends often slip under the radar, and discussion helps everyone make smarter decisions. Remember, hitting that like button, subscribing, and turning on notifications keeps you ahead of the curve, and engaging with us in the comments makes this community stronger. Gold is rising quietly, rates may be delayed, but the signals are loud if you know where to look. Keep watching, stay informed, and let Currency Theory guide you through these hidden currents of the market.